There are hedge fund managers making $1 million an hour. You know, it's crazy, right? It's money everywhere. It's money in everything. I want to help you. Start your business today. Come join my royal family. Subscribe to Casino is the Name. Hey, yo, what's going on right now? You're watching Casino is the Name, and the stock market crash of 2019 has happened all around us, right? If you've been sleeping under a rock, maybe you missed it, but there's a lot of uncertainty in the market. There's a lot of people who lost a lot of money. There's a lot of people who panicked, pulled money out. There's a lot of people who just lost their minds. I've had some very interesting conversations with some accountants. In case you don't know, I'm an accountant, but I've had some pretty interesting conversations with some accountants that I know, and from all different walks of life. And it is pretty interesting to see, I guess, kind of how other people's investment strategy is. And I figured maybe you guys might have some kind of advice, not even for me, but maybe for me, but just for the general public. Like, how are you guys doing? I did not put in anything past matching, right? Like, if you work for someone, whatever your employer is matching at, that's what I would put in. So some of you guys may not know how 401k goes, but basically your company is willing to match up to a certain point, a certain percentage of your salary. Some people, it might be 2% of their salary. So whatever you put in, up to 2% of your salary, the company will match. So let's say you make $100,000 and your company matches at 3%. So 3% of 100,000 is $3,000. So if you put in $3,000, they'll put in $3,000. So now you have $6,000, right? That's kind of how matching goes, depending on what your company may match up to. Some might match 1.5%. Some might match 5%, 6%, 7%. So depending on that, you'll know basically what level you should put money in at, because you're still doubling regardless, right? So if your company is matching at 6% and you make 100,000, you put in 6,000, they put in 6,000. That is $12,000 there. See, it makes sense, right? But past matching, I personally don't use my 401k past matching. That's me. I know some people dump 10, 15%. Definitely people who have a high salary. A lot of people who have a stupid high salary, they dump as much in their 401k up to a certain percent or a certain amount that they're allowed to, because it saves them on tax time. But me personally, what I would prefer to do would be to invest in the 401k at matching, and then outside of that, invest in a business or something else that would generate me money outside of that. And you still get tax ramification, tax, advantages from owning a business and everything, but you're definitely going to double your money at matching. After that, I would not be investing in the 401k. That's just me personally. So when I found out that some people were putting well past, some of my accounting counterparts were putting well past their matching amount, and a lot of them lost a lot of money. And the market, I'm sure it'll probably come back at some point. And that's another thing. People keep thinking that the stock market is like, well, the economy is doing great. Why aren't the stocks doing great? The stock market is about investing in futures. It is not necessarily the current state entirely. The current state helps you kind of predict futures, but the stock market isn't necessarily that the economy is. It's not a direct reflection of the immediate economy. The economy might be doing good. The numbers might look great. But there may be some things down the line that economists see. And those things are the reason why the stock market goes up and down, because the future of certain companies is uncertain, or certain markets is uncertain. I definitely believe that you should be investing in yourself. That's what I'm saying. Like a lot of people are putting money into 401k plans. For some people, it makes sense. I'm not saying don't do that. It makes sense for some people to invest past matching. It's just not something that I do. So when they all called me, I got several calls from accountants asking what they should do. Should they pull money out? Should they put, what they should do? And I was really just like, well, it's not such a big deal. You're still not losing. You're not losing as much as you've gained because you invested at matching, right? So, even if you put $10 in there, they put $20 in there. You might have lost $1, $2 in the crash, but it's not like you're over leveraged with your real money, like your full, outside of matching. You're not doubling. You're just putting extra money in there at that point. And I was really just surprised to see how many people had student loans, student loans and all kinds of things, no businesses, just a lot of things that they could have done with that money that might have, I guess, been beneficial, but they were just trying to dump as much money in their 401k to kind of fatten it up. And so this market crash has really woke a lot of people up. And so I just kind of wanted to know, like, what are you guys out there doing at your companies? Are you investing past matching? And it may work for you. I'm not saying don't do it. I just don't do it. I'm not giving any financial advice here. Just I guess trying to understand the psychology of it all, I guess. Every month you're dumping money into this account, and of course once we pass matching, it's just really all your money, and you really still you're technically gambling, right? It's an educated guess, but you could also just start a small business and yield a greater reward if your business does well, because of course it can lose too, but at least you're kind of more in control if you're that kind of person. And I definitely understand somebody who isn't necessarily the most proactive when it comes to extracurricular things. So I understand you guys just put your money in a 401k. Okay, cool. Or pay your house off or something like that. Just do whatever you got to do. But I mean, I was surprised, to hear that some of them lost substantial amounts of money. I mean, mine might have dipped, but I mean, everybody's dipped kind of a little bit, but it still wasn't anything that I was like, oh my God, because I'm really more so focused in other areas. So anyway, right now you watching Casino is the Name, man. Hit like, subscribe, man. I want to know how you guys are doing out there. What are you doing with your investments? How are you investing? Are you investing in yourself? And that could be anything from education to a business, or even investing in your children. I mean, they're an extension of you. I'm just curious as to see, what you guys out there are doing. Anyway, hit like, subscribe. Right now you're watching Casino is the Name. I'm out. There are hedge fund managers making $1 million an hour. It's crazy, right? It's money everywhere. It's money in everything. I want to help you. Start your business today. Come join my royal family. Subscribe to Casino is the Name.